A lot of attention being paid to some of those parts of the market that are just not participating. I think mainly it's small caps and banks are the ones that stand out to people and has people questioning whether it really matters. Now, the large cap indexes, as you mentioned, are in very good shape, hitting new highs. The S&P would start at a new high today if the futures are correct. But you have seen massive underperformance, especially in the last few months, of the small cap index. If you look at the Russell 2000 against the Dow, it's pretty stark. Also, bank stocks have underperformed all year, as a matter of fact. So I guess the big question now is there any predictive value in small caps lagging? And the answer is not really. Small caps sometimes outperform the big cap market. Sometimes they underperform. It doesn't necessarily send an economic message. What is clear is that a heavy financial weighting in the small caps is part of the reason the small caps are not participating. So I think you'd be much more concerned if it was accompanied by credit stress, so the credit market's acting up a little bit, or something else. But to me, it's just the rhythm of this market. And tactically, both small caps and banks look very kind of oversold and ready to bounce. So we might lose this talking point relatively quickly if, in fact, they come back and the big cap indexes hold together.
We had an analyst last hour who said, look, they've been underperforming. Small caps have been underperforming because the trade tensions have ratcheted down. We thought that they were going to be the big, strong performers because of all these trade tensions, that multinationals would get hurt. You've got a new NAFTA deal. You know, that takes a lot of the concern out. It's
true. I mean, there were a few-month period earlier in the year when small caps were kind of the obvious trade, the place to hide. Now, I always say not everybody can hide there, okay? The whole market value of the Russell 2000 is 10% or something of the S&P 500. But yes, they got a relative bid. And on a year-to-date basis, they're not underperforming that much.
I mean, what are we missing, Mike? What are we really missing? I mean, the multiple is not cheap. I get that. But earnings are, people say 20% year over year again. So it just seems like there's something underneath this that's going to, I want to say we're not missing something, but we got to be missing something.
I mean, I don't think you necessarily have to overthink it in terms of the support given.
How high can it go? It's gone up so much.
Yeah, I mean, look, I do think that the one bear point that I keep coming back to, and I don't really necessarily believe it, but look at how much great news and firepower it's taken to get the S&P up 9% this year. $1 trillion returned in buybacks and dividends, right? 20% earnings of growth, an acceleration in the underlying economy.
More left,
right?
Because it's
well, maybe. So that's the two ways to play it. But to me, that's one of those things that says, what do you got next year is really going to determine whether we're too high or not.
The third, fourth, or fifth derivative of rising rates has got to some.
Well, there you go. Yeah. At what point does it?
You know what? It's